Hey traders, Richard here, and in this video tutorial I want to go through one of my most favorite corrective patterns. Now you'll see that I've mentioned corrective patterns. There's obviously all different types of patterns in the markets, topping patterns, range consolidation type patterns you probably used to, like your flags and those type of things. Heads and shoulder patterns is another one that comes on top of the mind. But I want to focus specifically on a very common pattern, again, a corrective pattern that occurs in all markets and in all time frames. What I'd like to do is also show you on this actual chart how many of them actually occur during a trend, and then also look at the characteristics of these or the specific corrective pattern so that you can use this information or knowledge to potentially formulate a trading plan for yourself. Right, so I've got open here on the DX platform a trading view chart. It's on the Euro US dollar. I'm going to be using a 5 minute time frame just to explain things over here. But before I actually get to actual real examples, I want to get out my drawing tool here to just easily explain for you what it is I'm going to be looking at here or explaining in this video. So during an uptrend, obviously price will be making higher highs, higher lows, and then you'll get a move lower, counter trend corrective pattern, and then another continuation back to the upside. Similarly, in a downtrend, you'll have the same thing, price moving lower, and this obviously opposite direction. Price makes a bounce to the upside and then continues back downwards again. Now, as you know, this is just a little graph that I've drawn you here, but what we're going to be focusing on this video and in future videos are the different type of corrective structures that occur during that phase or the counter trend move. All right, so the one we're going to be talking about today, again, one of the most common ones is what we call a ABC, as it's known, or a zigzag, as eliticians would actually call it. So let's say we use this example here. Obviously, this is just a straight line for visual purposes, but you'll have for a zigzag price moving higher, for example, and this is an uptrend. When you get that counter trend move, you get a move lower. Price makes a move upwards, generally stops, does not move above that previous structure high, makes another move lower, and then you get a continuation to the upside. This looks like a thunderbolt, and that's why it's called a zigzag, or some traders might call it an A, B, C correction. Right, so this is the pattern we're going to be focusing on today. There's also different, more complex variations of ABCs or zigzags, which I'll discuss in a future video tutorial. With the downtrend, before we actually jump into the charts here and go and see if I can actually show you some of these corrections or these zigzags, downtrend will move lower. Then we have an A, a B, a C or zigzag to the upside, and then a continuation of that previous trend. All right, so let me just get rid of all of these drawings. And let's go look at some actual ABCs that occurred or zigzags that occurred during this strong move to the upside on the Euro US dollar. All right, so there will obviously be instances where you get very sharp moves lower. That's typically during volatile times. You don't get an ABC and price moves higher again. But if we take a closer look to some instances over here during this move to the upside here, for example, we have, let me just open up that, for example. We have, although it's not that easy to see on this one, a nice A, B, C, price continues higher, or zigzag. Later on, I'm going to actually do some chart annotation for you guys so you can see what I'm looking at. Here's another one. Price made a new high, breaking above this previous structure high, and we get another A, B, C, and price continues higher. All right, so let's see if we can spot a few more, and then I'll actually jump into showing you guys the main characteristics of these corrective structures. Here's another one. Although this move higher here made a double top with that previous high, that's still in my mind a corrective ABC. Here we have the same thing, a lower low, price fails to actually break to the upside. We get another move lower, zigzag, A, B, C, and price continues the way back upwards again. All right, so these occur all the time. I mean, you can go on and on. They all over the show. Here's another one over here. So just in this move higher, we had 1, 2, 3. During this move lower, very messy sort of price consolidation. We didn't really have any visible ones. Next move high, and this is on a 5-minute chart, all occurring within one day. We have another ABC over here. We have another one over here, although that first drop down was pretty aggressive. Move higher, another move lower, and then a continuation back upwards again. There might actually be one unfolding here at the moment. Since price is still in an uptrend, this could also potentially be an A, B, a C, although it would be too early to tell. This is obviously on the right-hand live market data as we watching this video at the moment. So that could also potentially be an A, B, C. Now, statistically, there are obviously different types of corrective patterns. We get double zigzags. Again, I'll be talking about that in more detail in a future video. You get your triangles like contracting triangles, symmetrical triangles, ascending, descending. You get expanding triangles. Again, these are corrections that I'll be going through in a later video. But statistically, ABCs or zigzags, the most simple format, occur most often out of all the corrections. All right. So what I want to do now is let's just have a look at some of these previous examples. And then using drawing tools, I can then go show you the underlying symmetry that's prevalent in this corrective structure or this pattern, how it typically tends to behave. And if you do know what the typical behavior is of this specific pattern, ABC or zigzag, then that will give you a good indication of what to expect, where these corrective structures might potentially end and where the trend might continue from once they have ended again. Right, so let's have a look at this one over here. Price moves higher and we have a beautiful looking ABC over there. I want to actually blow this up as far as I can or zoom into it so you can see properly. And then again, use my drawing tool over here. Clearly see we have a move lower. And this is what you'll do when you actually, this is in hindsight, obviously, but if this was in the hard right-hand side of the screen, we didn't have or the information knowing that this is obviously going to happen. Since this is your most common pattern, you want to always kind of, in my opinion, see, or think that you might be dealing with ABC because it's the most common one. This will still be early stages, but price fails to make a new high. Sometimes it goes as high as the previous high, and then you get another move lower. And as soon as price then breaks its first lower low, then that would be a good time for you to start thinking potentially I'm dealing with a corrective structure. In this case, a potential zigzag, since it is the most common, and that it might end at some stage and you get another move back upwards again. All right, so let me just do this quickly. A, B, C, and we have a continuation back upwards again. Now, if you were to use some annotations here, you can see they have the Elliott wave ABCs here on this platform. You can go manually put them in. This is how traders obviously or generally label their charts when they're dealing with an ABC or zigzag. Right? It's just another term, ABC or zigzag, whatever you want to call it. That's really up to you. Right, so very simple to see what the price structure looks like. Again, we're only focusing on ABCs here or zigzags in this video. Now, what are the main characteristics of these moves? Before I actually use a tool, I'm going to be using a fib extension. The main characteristic would be a move lower, and this is an uptrend as an example. Second characteristic would be a failure to break above that previous high. Sometimes, again, as in the previous example, price might make another high or just move straight or stop in line with that previous high, creating a double top. In this case, it didn't, create a lower low and then moved lower again. All right, so you have 1, 2, 3 phases. One is or opposite the direction of your trend, and one is obviously with direction of your trend. So we can say this is a lower low, a lower high, and then a lower low if you wanted to say it in that sort of way as well. But the main characteristics are in these phases and especially the ranges that they tend to repeat, as I call the underlying symmetry, because there's quite often symmetry in these moves. And what I mean by that is, yeah, I've just grabbed my fib extension tool, and you need to select 3 anchor points to draw that, which will then, to the downside, give you the fib extension levels. All right, so what you want to do is you want to start at the starting point of the correction, go to the first lower low, and in this stage, let's say you were trading around about here, and you start seeing this move to the downside, anticipate that you might be dealing with a zigzag, again, because it's one of your more common corrections. And using those 3 anchor points, you'll have then these extensions. The ones I typically like to use is the 100, which is not in itself a fib extension, but 138%. In TradingView, they use 138, or sorry, 1.38, and 1.618 will actually be 161.8, which is also the golden ratio extension. But you'll quite often find that your C wave, or your third phase, typically travels the same distance as your first decline, which is exactly what this tool is showing us here. You'll see, although price actually undershot this 100% here, it actually sort of hovered around there and then start moving back to the upside. And what I quite often do is go and use, let me just find that quickly, like a rectangle, for example. Let's say price is moving lower. I'm anticipating, knowing the knowledge that this might be a single zigzag or ABC. Then I use my fib extension tool over those 3 anchor points, the start, the first lower low and a downtrend, the first lower high and a downtrend, and extend that downwards, and then go mark with a rectangle. Sorry, I'm just trying to get my chart in focus here. Sorry, just lined up nicely. Then I go draw that between the 100 and 138.2. And that's typically an area where I would then anticipate for this correction to move, or to terminate, if that's the right word, or end, and to put it lightly, and then price moves back upwards again. All right, so this is typically what a zigzag looks like, or an ABC. And again, one of those characteristics is that it typically, the third and last move, or the C wave as they call it, or C phase, typically moves the same distance as the first decline that correction experienced. Now, does it always work like that? Definitely not. But knowing that this is the most common characteristics, that can be really useful in determining where that correction might end, and then also give you a bit of that advantage to see whether you can enter a trade when it does end, or you think it ends, or whatever strategy you want to use. But just knowing this prior to price, getting into that zone, you can then start to prepare and say, like, if price then gives me a reaction from that area, that I might take a trade, potentially getting in a position at the lower end, and then aiming to go for a target back at the beginning of where the correction started from. Because assuming you were dealing with a correction, then the obviously the assumption would be that if price does move higher, that it would at least test or break those previous highs. So, if you've got it right down here somewhere and got out there, that would be a really nice risk-reward ratio that you could have used over there. Right, so this video is not really about, or this tutorial is not really about actual trade entry or strategy. It's just trying to help you guys out, see these patterns a bit more often, and or actually go and try and mark them out on your charts. And knowing what their characteristics are, you can then use that information to your advantage, right? Here we got that other one. If I use my fib extension tool again, just put my magnet mode on, from that high to this low to that high over again, there we go. Almost the same drop, a little bit lower than the first decline. Again, if you were to go and then measure prior to price reaching that 100% fib extension, and you use your rectangle and go draw a box there between the 1 and the 1.382, then you can then assume that if this is a correction, obviously you won't know. We don't have magic balls here to see into the future, but just using that simple drawing tool, fib extension, marking out a zone between the 100 and the 138.2 extension levels, then at least you know that if you get a reaction from there, that you're potentially seeing the end of a ABC or a single zigzag. Right, before I end off this video, let's have a look at one more. I just want to scrunch up this chart and see if there was another one. Here we have another beautiful ABC. Again, they occur all over the show, and this is why I do love them. And again, just knowing what the characteristics are, that C wave or the C phase typically travels the same distance as that first decline. And here we have it again. We have a stop there at that 100%. Sometimes it goes to 138.2%, but there we go. Price then stops there, finds supports, and moves back upwards again, giving us one of the most common patterns, as I've been mentioning how many times now, probably too much for your liking, an A, a B, a C or zigzag, and then a continuation back upwards. Right, so that is the first and most common corrective pattern that I'm going to be talking about during these tutorials. There are also other variations, as I mentioned in the beginning of the video, of these zigzags. So you get double zigzags, you get triple zigzags. They're a bit more complicated, but what's really nice about this type of analysis is that when you do go and study their behaviors or their characteristics, if you want to call it that, they tend to repeat very often the same sort of price movements in their ranges, and sometimes in the time that they take to form, and those sort of things. With a single zigzag, probably one of the most useful tools is your fib extension, knowing that that third and last leg lower might just travel the same distance as the first decline. In this case, I've just used a downtrend, but it will be the opposite for, an uptrend in this case, it will be opposite for a downtrend. Right, so very easy, one of the most simple patterns, and I'll see you again in the next one, and we'll probably go over the double zigzag next. Thanks for watching, and hopefully this information can help you better plan your next trade. And it's always a good idea to go and annotate or go mark your charts, whatever your time frame is that you like to use, whatever market you want to trade, and go find these zigzags and also the previous or the patterns I'm going to be explaining in the future, and go and mark them off yourselves. And then as soon as you do this, it really helps you with your chart reading ability. Anyway, thanks very much for watching. Have a good one. I'll see you in the next one. Goodbye.